All right, here we go. About to start the second day of macro here, live on the I had to go on to Zoom, having problems with Discord. So we were live on YouTube this morning. We swept the low of the open here, and we had this displacement up over this mitigation block here. This little trade right here would have worked out. However, we did not take it because we were trading against this bearish fair value gap. It was a 5 minute here. Plus, we have this 1 hour over here, bearish. So it didn't align with our daily bias and kind of went against the trends a bit. So you can see it kind of worked here, but it came back to respect the PD array down here, right? So we've come down into below the 50% here. And now we are starting to make prices start to go on the upward here, bullish. However, the high of the day is right here. The London kill zone highs are here, and the Asia highs are here. So it doesn't give us much room, and we're not in macro yet. And we've swept this high right here already. So, best case scenario for the second day of macro, right in here. Let's sweep this. So all we can do is wait. Monday today, August 18th. We are in a no red folder day as well. We already have this ranging here so far, right? Not great. We're stuck between the high of the day and the low of the day in the range. I'm not even interested in a buy right here. Okay, we're in the middle of the range. We're going to wait for a clear of liquidity. So probably up here. Okay. We don't just hop into trades right here mid-range. You have this over here. Bearish, right? City. And the high of the day here. So if any of you are wondering why not, it's probably going to work is I'm not going to risk, say like this gap in here, why I don't get in here. I'm saying it's displacing over the high here. I'm not going to risk 30 points to win 30 points ever, right? We're stuck between the range. We want to stick by the rules. So rule number one, we're looking for a clear of session liquidity, followed by a market structure shift, followed by displacement over a breaker or mitigation block. We don't have any of that in here other than the mitigation block, which is right here. We displaced over here. I just want to chat about this trade that we didn't take here this morning. Some of you are wondering, maybe I'm repeating myself here, but here's your target, would have paid out. Here was your stop loss. So it paid out a nice 1 to 3 here. And some of you are wondering why I didn't take it. I explained it in my live chat, and I explained it a few times, but I'll tell you again. The overall draw on liquidity was here, and we were trading against a 5 minute here. And again, 1 hour bearish price to be trading in this. So it gives you a negative biased, negative as in bearish, sorry. There's more bearish than there is bullish confluence, even though we swept the low. You got to stick with your bias always first. Bias first, then we start looking for our sweeps. Okay? It has to line up with your bias. That's why. And it paid out. I get it. But you have to understand, like, that does not bother me whatsoever. That's not a mistrade because we only trade the model and the model is solid. And what that means is like I'm securing points every day in the bank. Not every day, but every week I'm collecting points. I'm collecting money, right? And that's the secret to success for trading. It's just trading the model. Don't worry about the stuff. Like, don't worry. You're never going to be able to capture all the moves. You know what I mean? They're just there to entice you. So just trade by the model, and skill shot worked out nice though. I remember taking trades like that. You see, as a good example, this displaced over the low here, thinking, oh, there's a sell here. It's displaced over the low. It's not swept anything. It's paired, but it's not swept anything here. It's probably just coming back to this 5-minute fair value gap bullish, right? And you wonder why you get stopped out and stuff like this. Just because it's giving you an entry model doesn't give you the opportunity to get in. It's just an entry model. You need the confluence. You need the rest of the pieces of the puzzle. And that's why we're going to secure points in the bag every week, every month. Maybe not every week, but most of the time it is. Price action is absolutely painful today. No red folder. It's like watching paint dry on the wall. And that's just how it goes sometimes, right? So the most probable trade or a likely trade would be to sweep the high of the day, which we're still in the AM session here. So it's not a session really, but it is the high of this day right here is minor buy side liquidity. And if you match up minor buy side liquidity inside of this fair value gap or close to one, right? This would be the wick. And we have session above it. So this would be a good sell in here. And that's what we're looking for inside of this macro. But we are moving like molasses. So I don't know if it's ever going to happen or if it's just going to happen in the 30 macro. So you guys let me know what you want me to do. Do you want me to keep the feed going? Or do you want me to pause it to show that I don't take any trades? I mean, I won't be taking any trades. Not today. The only time I do trade out of a macro, it's going to be like, depending on the time of year as well. But I would need to take major external liquidity out before I took a trade outside of macro. That wouldn't even count. It'd have to be maybe up here. It's not even really external, I don't think. So, like, and I do that in times of high volatility, so I can get a move. It's got to be on the correct side of the of my daily range as well. So you can see up here, I've marked it in. Oh, I might have gotten erased. I always put it in teal. So this is the range of the day, the 50% mark. So you're looking for buys below it, right? So you're looking for buys below this premium 50 here. Now the problem is that it's not in confluence with anything, right? You have all these sessions that are in the way for a sell, right? You don't take a buy here ever, right? So it's just about matching up the perfect confluence. On some days, you know, the premium 50 is down here and you're below it and the sessions are above you. And that's when I may trade out of a macro. If it sweeps session external and then we're below, like I really put a lot of stock into this right here, right? You're supposed to be buying below it, selling above it when it's in confluence. That makes sense. All right, so it doesn't really look like anything's going to happen between here and here. There's no way we're going to be able to go up and sweep this in time, right? Even the high of the day in this macro. So I'm going to pause the stream and I'll be back in the third AM macro, okay? Let's monitor this third AM macro, which is absolutely brutal today. But you know what? We're not losing money. That's all that matters. Account preservation. Look here, I couldn't even take out the high of the day. I couldn't even take this out. So basically, like, we have FOMC coming up on Wednesday. This is the Monday, maybe even the Tuesday will be bad. And the more high probable trades will be after FOMC, Thursday, Friday. Especially if it has a red folder news on Friday. So am I happy with just one trade on Thursday morning? Absolutely. For the week, come out ahead, 60, 75 points, 1 to 2 for the week for FOMC, or I didn't lose my account. Start a macros right in here. The low of the day down here, called it minor sell side liquidity here. That was the low of the day. It had already got run through here. And we are right in the middle of the high of the day and the low of the day. Ranging in this range here. So am I enticed on looking for a trade in the PM set, or this would be the lunch macro over here? Technically, this third AM macro, sorry, is the beginning of lunch, but I will not trade past this macro right here, especially with no red folder, especially FOMC being on Wednesday. What we're getting here, though, is an explanation of why I don't jump on certain things, right? A lot of people getting their stop losses taken out in here. It's just building or an engineer of liquidity. All right, that's a good question here. So somebody wants to know if it swept this low right here, would that be adequate enough to get into a trade? It's a sweep of liquidity they want to know. So it's not a session sweep of liquidity. This low right here is not a session. It is, because there was a market structure shift on this leg, it is a form of sell side, minor sell side liquidity, but it isn't a session, okay? And it would be legit for sure right here if it swept this minor sell side liquidity. If there was a bullish gap here that it traded in here. So it sweeps this low, which is minor sell side liquidity, and we're in this fair value, and we took it just above it's fine, in and around it. That would be legit for sure. Now, if it sweeps the low of the AM, that's a session, right? Because if you look, we got, this is a session. New York AM high, New York AM low. We are trading in between the session. This is technically like no man's land. You could call it the beginning of lunch. Lunch will start right here. We don't trade lunch. than the PM session, right? So that's a very good question. And the answer to it is no, it wouldn't be good enough unless we were in a fair value gap that was bullish. Okay. I think what I'll start to do so everybody understands is I'll mark anything that says monitor sell side liquidity, and then I'll start marking sessions where there's sessions. Okay. Okay, so this is the end of the macro right here, 3rd a.m. There's no way that we're going to come down and sweep this low of the AM in this macro and then make a move and be able to get in. So I'm going to stop trading here for the day. We preserved our accounts. That's all that matters. We'll see you tomorrow live on YouTube, 6:30 a.m. for the first AM macro. And we'll see if we can secure something. And if not, talk to you soon. Thank you. Thanks for joining in, guys.